The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Checking things out. We may have to get the screen share up here during the commercial break. Looks like it's giving me a little fit there. But we'll come on back to it. We'll get you caught up. All right, now let's just go ahead and talk about where the markets are at right now. We got the S&P is currently up 2.25 points. We got the Russell up 1.8, and the Nasdaq is up 7 1/4. We'll get on over at the Dow. It's up 29 points. With copper is up 1/3%. So pretty much all positive, but not a whole lot going on. Check it out. Gold right now. We got gold is currently down 7 points on the day. We got silver is down about 0.5%. That's both gold and silver down 0.5%. Natural gas is flat, unchanged on the day. Oil rolling on over there is currently up to 21 pips. We got corn up 25, and we got soybeans up 4.5. And looking on down at our FX pairs, we got the pound dollar flat, unchanged on the day. Euro dollar is currently down just 4 pips. We got the euro pound is down 5. Dollar CAD is up 3 pips on the day, with the dollar franc up 7. Dollar yen is currently up 13 pips. Pound yen is up 19. Euro yen's up 17, and the Aussie yen is up 33 pips on the day. So that gets you caught up right now on the market forecast there. Just want to look at where everything was at and make sure you know what's going on. Let's go ahead and hop in and go through our news trades for the day. I can go ahead and walk you through those. You don't have to see a whole lot of stuff to see that because we're just going through the stats and lining them all up for you. So let me pull up my little plan I put together every week, and I'll just talk you through it. One moment. There we go. And we are on the 22nd. So earnings, just so you know, I'm sure you already know if you don't already, but we had some earnings come on out this morning. Here on July 22nd, we had the Comcast on NASDAQ came out at 7 a.m. We had United Technologies come out at 6:30. Coca-Cola came out at 7:30. McDonald's came out at 8. Verizon came out at 7:25. All those on the Dow. So a little bit of, little additional movement there in the Dow. Not a whole lot, but anyways, those all came out on the Dow early this morning. Let's go ahead and get you caught up with what's coming out this week on earnings. We'll just focus on those real quick and knock them out. We have Apple is coming out today, 4:35. Okay, so and that the wire and all that stuff comes out later. So just be aware of that. It's not really one of those. I wish it was. It's not really one of those you can trade. With Nadex into the close, unfortunately. The ways that you could trade it would be you could try to go in and look at weeklies, but they're going to move slow because this is Tuesday. So Friday binaries are going to move really like molasses. Looking over at Microsoft, it will come out right at the end, so be aware of that. Don't get caught up in a trade there. And again, Microsoft, will be coming out. Let's see, at 4:10, and so that is one definitely to be aware of. We also got that could impact the indices. Obviously Dow, Nasdaq, right there at the end of the day. Looking on over, what do we got for tomorrow? We got Boeing is going to be coming out. So I'm going over the big boys in the indices here. Boeing is going to be coming out at 7:30 in the morning. Got those on confirmation. We're going to have Qualcomm, Facebook. Let me double check Apple because I got 2 different confirmed dates from 2 different sites. So now I'm all curious. And Apple earnings, and I just want to see if I got 22nd or 23rd because it looks like we got 2 of them that are set up. due later today. Okay, it is for the 22nd, so that must have been the unconfirmed one. And it's got to make sure that I always double, triple check those confirmed dates, because you don't want to trade off news that isn't coming out yet or that already came out. You may be a little disappointed by the reaction, or surprised otherwise. So I'm going to note that so I delete this one out. And all right. Anyway, so let me see what else we got going on. Other earnings coming out this week that you want to be aware. We got Verizon, like I said, coming out. We have Qualcomm, Facebook, AT&T, Gilead. So all those are coming out. And let's see here what else we have. I'm trying to get this thing up, like pushing up, but it's not working. Okay. So yeah, so we'll catch up on that one. But anyway, so that lets you know what stocks are coming out with earnings this week. We'll get more in detail in the times tomorrow. I just want to make sure I got all those confirmed dates and times down for you. All right, so let's dive into what else we have on our list. We have the U.S. CPI report. It's a pretty quiet week overall. And let's see what we got. We got U.S. CPI coming out for the 22nd here. And what we were looking at was a very small move, really, in the euro dollar. And so I'm going to pull up that chart. I know it's not sharing to you yet, but I can at least go over with you how it went. And basically what we were expecting was 8 a.m. to 10 a.m. And all right. So let me open this up. We'll pull it down. We'll go through it. And grab my ruler. And 1 second. I'm sorry. I'm having just a little bit of issues here trying to get this thing going for me. Okay. So we got the euro dollar. We got the US CPI news. And I'm just going to pull up a different one. There we go. Okay. And from 8 a.m. to 10 a.m. looks like we got a move of about 37 pips, okay, from high to low. But let's check out where we got from 8 a.m. for our news trade to 10 a.m. We got a move of about 16 pips. So really not bad. We were looking for 30 pips on the trade. If you were able to get the 30, that's one of those I was like, I don't know if we're going to be able to get it. But if you're able to get it, then trade went really well. On that one, and knowing that's a lower range report, you could also combine that with like expected moves and things of that sort to be able to help you out as well when you're doing all this. Okay, so that gives us the updated information that we needed in order to do the euro dollar trade. Let's go ahead and check out what we got on the other news trades. And let me pull those up. Okay, so that's your CPI. Let's go ahead and check out our Aussie CPI. That came out last night, and I'll pull up the Aussie chart just to the measurement. We'll see how the trade worked out, but we had pretty low expectations on movement, and I went through a few different variations on this trade with you on the show, and so I obviously I hadn't went out yet, but I want to make sure that you have all the variations that I went through on the show. I went through a 7 to 9. I went through it wouldn't be 9 because it comes out at 9:30. Okay, so that's the iron condor going up to it. Okay, so that's the 7 to 9, and so be ready for that one. And we got the 7 to 9 iron condor, and what I said was $20 really minimum profit on that leading into it. Then after it, we got the strangle. But I gave you several different strangle options on this trade. What I talked about was you could do a 9 o'clock to 10 o'clock. You could do a 9 o'clock to 11 o'clock. And you could do a 6 o'clock to 11 o'clock. So you want to make sure that you have, all those different pieces in your news trading plan. So make sure you write all those down, get all of them in there, okay? And let's see here. What do we got? Going into the 23rd, looking at CAD Core retail sales being released at 8:30 in the morning. It's going to be on Wednesday. We talked about an iron condor. We're looking at $30 minimum profit, entering at 8 a.m. for 10 a.m. So you ought to have that one already in your book from. We went over that. I'm just sort of doing a recap for you real quick. We also had the oil inventory. Be ready for that one. And let's see. We talked about tomorrow evening from 11 p.m. to 7 a.m. Looking at a straddle. You could get in really as early as 11 o'clock. You can get in late as you want to, really up to the release at 4:30. So, as late as really 4 a.m., I guess you could say, for a $40 maximum risk on the straddle, making sure you're getting that 7 a.m. to give it time to move. So you want to make sure you go through and get that one. And let's see what else we have. Of course, we got weekly inventory. We talked about that already. We got natural gas storage happening on Thursday. We went over some of the earnings. We'll go into some more detail for you tomorrow on those. And we'll get the rest of the plan laid out for this week and next week, so you can plan that out. Check it out what else we have on our list. Give me one moment. I talked about some Be Aware events that are missing. Let's see. I want to make sure you have Governor Carney speaking. Let's see. Do I have that one on the list here? Yeah, I need to add that in. Okay, so on Wednesday, we're going to have Governor Carney is speaking. We got the core retail sales. That's good. For New Zealand dollar traders, just be aware. It's not really a Nadex thing, but for you New Zealand dollar traders, be aware that their interest rate announcement is coming out. The one piece that I would be aware of is if you were holding an Aussie, position, especially an Aussie position, through the 5 to 6 p.m., when Nadex is closed and that interest rate comes out, if New Zealand does decide to change something, because they are expecting to actually raise their interest rate, okay? So they're expecting to bring that interest rate on up. And if they're able to do that, then that could actually impact the Aussie have a pretty big impact on it. So be careful on holding that position into the close, like if you're doing like a daily binary, like strangle, straddle, or position or whatever on FX, okay? All right, we'll be back right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, TAZ Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos TAZ Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to TAZ Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhoades, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And so we're basically just going through, we're walking through these news trades. And, you know, some of y'all are new to the show. You haven't listened in before. And I want to make sure that you do know how to take advantage of the news trades. One is you can trade them, but two, you should just be aware of them. And that's the first thing. The most important thing to me is that you're aware of the news. And because so many traders don't even have a clue that the news is coming. They're not aware of the fundamentals. And then they get hammered. You know, you got a Wednesday coming up. They're trading oil. They have no idea that oil inventory reports exist. They have no idea that natural gas exists. And I'm not talking about like the last up-to-the-minute thing that just happened. And there is some good resources for that. So I like to use financialjuice.com. It's a great resource. Feeds in like 50 different sites. It is really, really helpful. I've found things on there before I found it anywhere before. So that's good for that last-minute thing. It's also a good thing for sort of reading the outcome of the fundamentals. But I'm not talking about so much, just being on top and trading the news, even though I do trade the news. I'm talking about, more importantly, is being aware of the news. The whole point of diagnostic trading is to be one step ahead of the markets. And one of those steps is the fundamental aspect, is being aware of the fundamentals, when they're going to come out. And being a step ahead of the markets is, what should I expect from that report? Not just knowing that it's going to happen. That is because if you don't know the news is going to come out when it's scheduled weeks in advance, and you have no idea, you're not even paying attention to that, then you're definitely one step behind. Okay? And then just knowing that it's going to come out doesn't really put you ahead unless you have the knowledge of what really to expect on that market, how that's going to, maybe impact the way that you trade or the way the market moves, or how far you should expect that market to move. Does it impact your market? Does it not? just little things that can make a massive difference and really help you out and help you improve as a trader. So you're not caught, just out of nowhere. You're just like, where did that come from? I mean, you should have known it was coming. And so that's why I'm going over this stuff with you. It's not just to give you a news trading plan, which is obviously a great benefit, but it's to give you a plan for your trading when the news comes out of how you might want to respond. Maybe it's a big report and you should really be concerned about it. Maybe it's at night and you could care less because you don't trade the Aussie. You don't trade at night. Maybe it's the FOMC at 2 o'clock. Well, if you're trading gold, you better watch out. So, I mean, if you're trading period, eventually the news is going to matter to you. Maybe you don't trade stocks, you trade futures, so you don't care about earnings releases. Well, if you trade stock indices, you might want to start caring, okay? Because stocks move stock indices. So maybe you don't trade Google, but you trade NASDAQ. Maybe you don't trade Apple, but you trade NASDAQ. We can just keep going on down the list. And those are things that you should care about because they do impact the market. They do impact your trades. And you should know when they're coming out. It doesn't mean that you're going to place a trade based on them, but you may decide not to place a trade based on them because you don't know what to expect. You may decide to hedge a position or tighten a stop knowing that there's about to be a market-moving event that is going to be released. And so that's what I'm hoping to be able to help you with and open your mind up to a little bit on the fundamental aspect of diagnostic trading. So some other things that you could, keep in mind is you want to be aware of the statistical moves whenever you're doing trading. And you want to go in and you want to have that correct expectation of movement. It's part of what puts you one step ahead of everyone else is by having a correct expectation of movement. So hopefully that you're getting that down, you're getting that piece down, and starting to understand the importance of deviation levels, and knowing when a market has moved a deviation. And I'm not just talking about the level itself, but the actual deviation move. And I'm not talking about a standard deviation. That is not going to be accurate enough for you to trust it. Like it'll work and then it won't work, and then it'll work and then it won't work. What you're really going to want is you're going to want the ability to go in with absolute confidence and go, you know what, most of the time this does work. I've seen it work day after day after day. And, like I have deviation levels, pivot points, you can call them whatever you want to. There's 1,000 different names. Here's the point is they work because they're not based on historical movement. They're actually a leading level indicator because they use applied volatility to determine what the pivots are in the markets. All right, you stay right there, and we'll be back right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, going back here to the Diagnostic Trading Hour. And so I had a little conversation with a trader during the break, and we were talking about some things. We were looking over at spike strikers, and it's one of my favorite trades to check out. And one of the things I was talking about is I'm real big on looking at volume when I'm choosing what kind of binary I'm going to trade with it. Because if volume is not pretty intense, then I don't expect the market to really pop and trend for a momentum scalp. I don't expect it to really go that far. I expect it just to sort of be flat. And therefore, I don't want to trust momentum scalps with my trades. I don't want to trust spike strikers with my trades. I probably, if I was going to do momentum scalps, I probably at best would do them on, I would say, minute-based bars with volume so low. I wouldn't wait on diagnostic bars because I think all the action would probably be over by the time they plotted. But I definitely want to focus on my in-the-money trades when volume's low, because that means I don't expect a lot of movement. And trades there, it's not. If it's not there, I'm not going to force it. I also am big on staying away from trades that are end of hour on in-the-money. So that may rule some stuff out for me. And if it does, that's okay. But if we go over here and we look at, right here, this one is a 5-minute one. It's a buy. If the market breaks this high, and it's at the end of the hour, it doesn't break the high. So high 102.56, 102.56. So we don't get a conservative entry. You could have went aggressive on the entry if you wanted to, but you would have had to go in the money, and you'd have been top of hour. And I definitely do not like in the money trades at top of hour. because they're just not going to decay. I'm not going to get that time decay effect at all in my favor. I don't expect these to move fast, so I'm not a big at-the-money trader on them. You could try to go for them, and if the market at the money, I could see doing if you got some volume, if you got some pop, and there's no out of the money there, and you're going to go in and grab $20-$30 and hop out. And it's not that it won't even work for you. I mean, if you got enough time, it could still come back in your favor. But I mean, really, when the market's flat, you don't want to try to push those out of the monies. Even like 5 ticks can be an eternity, when the market's not moving. And at other times, like 20 ticks cannot be far enough away when you're in the money when there's a lot of volume. So really, you wouldn't have got an entry here. So if I walk through the day for you on oil and look at this, and we'll start off here this first thing in the morning. So we got a 5-minute. There's where the entry would have happened. It did not break the high. So didn't get a conservative entry. I'm definitely not going to take an aggressive entry at top of hour. I don't like top of hour anyway, so I'm definitely not going to take an aggressive. I can take it out of the money, conservative, but I'm not going to take an aggressive in the money. I'm not going to take an aggressive out of the money on top of hour. So no trade right there. Go to the next trade. Okay, so we got a 5-minute. It breaks high. Okay, that's a trade I like. I actually do like that trade, but I'm going to take it in the money. So that's going to put me, if we're at about 102.71, 72, that's going to put me, let's just, and I'm sort of assuming on strikes right here. I could pull up the strikes and tell you. But about 102.50 would be my strike. And it's one you probably have to hold. It'd be pretty intense. Let's see here. Let's look at, I got a little beta indicator if I still have it. And I was writing it up, but I may have removed that one, because I know I was having a little bit of an issue there. Yeah, it may not even be in here right now. Let's come back to that one. Okay, so anyways, but let's just say it was 102.50. It could have been closer. I would not have done like a 102.60. So if it was 102.40, hey, great. But still would have been, that one right there would have stayed in the money. If it was 102.50, then it probably came down. And if you're using really good risk management, you probably hopped out of the trade, okay, on it in the money, because it popped up and then it came back down. That's assuming that you did not get a fill, or that you, I'm sorry, not that you didn't get a fill, but that you did not take profit. It did move up about 10 ticks, which doesn't sound huge. That's about 15 ticks. And it took about 15-20 minutes to do it. So if you could have been in and bought the thing, let's just say for 70, you could have got out at 90, then, I mean, you should have been out of that trade. And then it comes on back down. But that one would have been the one rough one. I mean, it just really depends upon whether or not you could have taken profit. And we're looking really close to being able to build we've been working on recording all this data, so hopefully we'll have this done soon, and then we'll be able to pull up any chart we want from any historical day for any strike. It'll be really nice. And then, so right here we got another 5-minute goes. It does break. It's not top of hour. It's fine. It is a conservative entry. That's great. But again, look at volume. It's pathetically low in comparison. Like not breaking. Yeah, it happened on the spike. Of course it's going to happen on the spike. But all the other volume is just really low. I mean, more than 1 out of 5, or basically if 1 out of 5 are meeting or exceeding, that's a low volume day. Okay, that's sort of a simple way to look at it. And anyway, so yeah, low volume. We're definitely going to do it in the money. We're at 102.60. That's probably going to put us at a 102.40 or so. So right about down here is what the entry you would have had to have taken if you would have got a fill. Okay? Goes across. You had an entire hour, so there's a good probability you could have got a pretty cheap fill, probably $80 or so. It's moving on across and then expires in the money. So right here, you got a 5-minute right there. Doesn't break, doesn't trigger. Again, I'm not going to take an aggressive entry on out of the money top of hour. I'm never going to take an aggressive entry on in the money top of hour, and I really don't even like conservative entries on in the money at top of hour. So we didn't get a conservative entry on out of the money for the top of the hour, so that wasn't a trade. So there really hasn't been that many trades on gold. I mean, that's on gold, on oil. When we're looking at it, and you really gotta always make sure you set back, let the trades come to you. Don't try to force them. Don't go, man, I really like these out of the money. That's what I'm going to do. Or hey, I see a signal, I'm going to take it. Well, remember, look at top of hour, because and the money's going to decay really, really slow if you try to hop in there and force that trade around. And then looking on over here at we can pull up all different charts, but if I look at momentum scalps, let me see here. See what we got on the day. Give me 1 second. I'll open that chart and put it on the screen for you. Okay. And all right, there we go. Get that pin off there. So I can bring this on up. Sometimes it just takes a minute for it to load everything. And anyway, so once we get that up, that has taken a long time. We'll look at it, but like I said, momentum scalps are a possibility you can check out. The biggest thing on momentum scalps, the biggest mistake I see traders make on these is they do not wait for the confirmation. They hear exceeding volume, and boom, they go in and they grab the trade. That's the biggest mistake I see traders make. Wait until the thing breaks the high by 3 ticks, because it will just oscillate around on you and may not ever even trigger. It may break it by a tick and then go around, and you want to get in that trade so bad that you end up taking losses. And it's it's an overtrading syndrome. It's just getting in there, sort of that cheetah personality we talked about last week, where I went and I talked about some of the different trading personalities. And you don't want to get stuck in that rut of jumping in trades too fast, and then you start questioning. And what happens is it messes you up on the good trades, because you start thinking that the reason you're having problems is the trading system or the way the market is today or whatever. And you're like, you haven't really stopped and gone, have I followed my own rules on this trade? Okay, what if I would have followed the rules on this trade? What did I miss out on? And that's where that survey step comes in. And you at least got to do it once a day. Eventually you'll start doing it really fast, and you'll start doing it every trade. And you'll go, what did I do right? What did I do wrong? What should I repeat? What should I not repeat? And it'll catch you for making mistakes for the rest of the day. So it's really, really beneficial to get, fast at those survey steps. So that way you're not having to go through and, have a whole day of bad trades before you figure it out. But hopefully that helps you out a little bit. Some other potential trades that we can do. So I'll put some other stuff together that will line up here in a few minutes. But so we got the spike strikers, pretty slow, flat day. Momentum scalps. Let's look at those. We were talking about that. And then while that's going, I'll look at some other stuff here in a minute too. So momentum scalps will sort of almost a whole different picture, right? When we clean this up, when we look at the diagnostic bars. And it's really just when volume, exceeds expectations. Let's start, 8 o'clock in the morning. Let's go from there. And so right here, about 8 o'clock, okay, that's our first one. And volume was at 550 on an expectation of 440, so it did exceed. It broke by 3 ticks. We sell, we buy back. So it's pretty simple. Okay, so we sell right here. We buy back right there. You're actually going to sell on this bar when it breaks 3 ticks below the low and buy back. And we're going to repeat that again here. There we go. Let me get into constant drawing mode. It makes it faster. All right. And we're going to do that again here and here and here. And here. And then let's check our deviation level. Okay. So we are about 80% down here of our deviation. That's another good way to look at it for stopping. But with it, when within basically 4 bars of deviation, I want to stop from my high to low. 80% of it's another way to do it, but 4 bars is one of the ways I like doing it. But we're basically at a deviation rating of, let's see, right here we're going to go into 80% there. Okay, so just so we have a plan of when we're looking at stopping. Okay. So we add in one more right there. We don't add in one here because we do get that 80% level. It turns around, pops up. So we do get a buy. That one doesn't work out. It turns back around, but again, we're at that 80% level. We're leaving it alone. It's going. Finally, it turns back around. We pop up for a buy. Got a buy there. And then it really just oscillates into the end of the hour. We don't really get anything after that. Okay? Then we got some more coming back down like this, playing right at this deviation level. And then as far as take profits go, if we go in, we're going to take profit here, 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 here. And Let's see, on this one, out of the money, you might. That's a maybe. Okay, I've taken profit on that one. This one you would have lost on. Okay, so we'll just mark that one as a loss. This one, completely, I'm going to put that on the maybe scale. So we might have taken profit there, or we might have lost on that one. So really not a bad morning, even on Momentum Scouts. But on Momentum Scouts, you can't take one. It's like Doritos. You can't have just one. You gotta go. Otherwise, you're guaranteed to start later in the day, and then you're just gonna grab the crap. So, and then you're gonna lose one. You're like, you get frustrated. You're not gonna pay attention. You're gonna miss out on the other ones, and you want to start that thing when that volume is highest, when it's ramping up, when the trends are happening. When is that? You can do this all day long, but I mean, of course, my favorite time is going to be, morning session. And you can just see how it's just boom, 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 boom. We're just getting increasing volume, and then watch what happens. And this is a good clue that you might want to back off. Like, volume tells you so many things that people just don't pay attention to. And it's like, okay, if volume is increasing, and look where it backs off, and then it steps up a little bit more. So that was sort of like your warning shot. We don't have the volume that we once had. But hey, it goes back up, okay, but now I'm 80%, so I'm going to back off anyway. But then look at what happens to volume. Boom, right there. Okay? And you have a losing trade. Are you surprised? This is what I want you to think about. Are you really surprised when your volume, dropped significantly? That's a massive move. That's a massive, massive drop. We went from having 3,500 contracts down to having 1,000. So our volume dropped by like 70%. Shouldn't be really shocked. It's starting to pick back up, but it's picking back up right into a deviation level. So should I expect that to last? Nope. I grab one trade on it, maybe, and that'd be pushing it. I wouldn't even want to do that. And it would have worked, but we're in that one deviation level. And so right there, so you probably take a loss on this one, but would you have taken a loss had you had looked at your volume and saw how it just died? It just cut off. Is that the trade you want to go in? Is that momentum? Momentum is increasing speed, not decreasing speed. So you got that. Now, other things you can do to help you with speed. Let's check this out. Okay. There's some things that people, again, don't look at. We can look at velocity, and we can look at the timer. Just how long did it take a bar to complete? Because we're talking about time-based, non-time-based bars. We're talking about tick-based bars. And how long did it take that bar to actually form can have a significant impact on whether or not you really interpret that to be velocity, momentum, or, which I think I put the same one on there twice, or just noise. So we'll take a little deeper look into velocity here when we get back after this break. Okay?
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. DirectionShares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the DirectionShares carefully before investing. The prospectus and summary prospectus contain this and other information about DirectionShares. To obtain a prospectus or summary prospectus, please contact DirectionShares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhoades, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhoades Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. And so what we're looking at right now is I'm talking about, momentum trading. And to understand the idea of, you want to, if you're doing a trend or if you're doing a out-of-the-money type scalp trade, you need to have volume that ideally is increasing, and you need to have a momentum, which means it's going like movement with speed, like it is accelerating, okay? And so acceleration is sort of if you look at a timer, you can sort of see it. It's almost the opposite. So if you look at the bar timer, which is, I think, a really underutilized thing on tick charts, and look at the slope, okay? So notice how volume is picking up right here. But notice how bars are going faster and faster, okay? So things are speeding up. And this bar takes 30 minutes. This bar takes 15. This bar takes 14. This bar takes 0.6 minutes, okay? This bar takes basically half a minute, so 43 seconds, all right? This bar here takes about a minute, starts slowing down a little bit, and look at that, volume's peaking out there. This bar, remember I said that's your warning shot? See the exact same thing. Look at this. Now we're going up to 8 minutes. So we went from less than 1 minute, okay, like 81 milliseconds or whatever, or 1,000, I don't know, whatever that is, 810 milliseconds, right? Up to 8 minutes on this bar. That was our warning shot bar, okay? Things sped up a little bit more. You get so excited, but again, you still keep it in perspective that we have that one deviation move coming up. And then, remember I said, like, see how this volume just goes pathetically low? And look at the trend on time. It's going up. Okay? We don't want things to be going slower. If the timer is going up, things are going slower. If the timer is going down, the bars are moving faster. Okay? Well, they start picking back up again, but again, what happens? We're right near this one deviation high to low. Remember, focus on that high to low. Okay? And that's why I like the deviation indicator, because you have a 1. You don't see that on just the deviation levels. So you got to be measuring that high to low to actually go, what is a deviation move? And then we get the same thing. So if I look over here and I'll see that, okay, so I'm going to stay out of those down moves. And then what do I start seeing happening? It starts slowing down again. Okay? So, wow, all right, well, definitely, so stay out of this, all this chop. So volume's dropping, that's going up. Expect the market to chop around a little bit. Don't expect a big move up or down. What can you learn from this? Not only can you go, okay, well, I'm only going to do, like, say, in-the-money spike strikers. I'm not going to do out-of-the-moneys, like when volume's low over here. This is on, like, the 5-minute bars, okay? But by reading volume like this right here, and it becomes really clear on diagnostic bars more than it does just on time-based bars, when I see bars taking longer and volume declining, that might be when you want to focus on range-bound trading like butterflies or spreads on, condors. That could be your clue of when to get out your butterfly net and go, I bet these suckers are going to close within, like the expected close to close. Okay? And again, that's whenever you see the timer taking longer and when the volume's going down and the bars are taking longer to complete. Think about that. They had more time to fill orders, but they're filling less and less orders. So less orders are being filled in a longer time frame. That is a decelerating market. It's not a momentum-moving market. So start looking at that. Maybe draw some little trends on volume and on, the bar timer on your chart. And velocity, those are like 1 second or less bars. They're really fast bars. But just look at that bar timer, look at that volume, and see if that might help you pick out better trades for momentum scalps, when to not do them, for butterflies, when to do them, for spike strikers, whether to do in the money or out of the money. Little tips can help you out. I'll see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.